Saturday, July 8th, 2017, Monaco 64, home of alternative economics and contrarian views. So I'd like to talk today about gold seasonality, Andrew Maguire, and also Bitcoin. I'm going to look at the technicals in Bitcoin. I did a video a few weeks ago about Bitcoin. When was it? June 22nd. And I had a look at the price of Bitcoin, and I said at the time that Bitcoin needed to consolidate a bit further because it had gone up too quickly. First of all, though, I want to start out with gold. Yesterday, of course, we made a new low, recent low of 1207 after non-farm payrolls. Non-farm payrolls, I know those are like bogus, fake statistics. But the markets and the algos react to it. The number was better than expected. 220,000 non-farm payroll, estimated non-farm payrolls. They're all hypothetical jobs anyway. Gold yesterday had a fairly volatile day. We got up to 1229 and the low was 1207. And we closed at 1213, the late COMEX close on Friday. And I want to have a quick look at the chart here of gold. And I know a lot of you who view, who follow me and view my videos don't believe in technical analysis. I think in the short term is very difficult. A lot of you think the market is manipulated, but I think it's still a valuable tool. So I wanted to show you this chart here because, as you can see, we've got a double top just below 1300. We had the high in April at 1295 and the high in the beginning of June as well, just around 1296 spot. This is spot price. And it's a double top. And the thing about a double top is if we break the midpoint of the double top, which is that low in the beginning of May, just below 1220, then the market's supposed to go the distance from the double, the double top to the midpoint, which is around $75. The objective would be 1220 minus 75, which would take gold down to to that low around 1220. That would be 50. 1145. That would be the objective in gold. I know some of you don't believe in technicals, and but that could happen. It looks very much set for a move down, but who knows what's going to happen? And that's why I want to talk about gold seasonality, and also I want to talk about Andrew Maguire. A few of you who subscribe to my channel have made some comments about how Andrew Maguire made a comment, I think it was June 10th, that by July 5th, there would be huge physical orders in the gold market. And that hasn't materialized, but he's been on again with King World News in an interview. And I'll put the link to that interview below. And he makes some interesting comments. I haven't spoken about Andrew Maguire since he, I don't like, I'm not, how can I say, I'm always a bit wary of people who predict things like that, that they're saying they know that the people are going to do this and that. It's always a little bit tricky, especially if he comes out in public. But some of the things he said in the interview are quite interesting. So I'll just summarize what he said. Basically, he's saying that there's going to be sovereign-like demand for physical gold. He didn't say it was sovereigns like central banks or other entities. He just said it was sovereign-like demand. He expects that there will be around 250 tons, metric tons of physical demand, and he says that the physical market can't clear that. There's no way that it can do that. He expects it to start anytime soon. And he actually is saying that this is going to be related to starting a blockchain currency based on gold, physical gold, and silver. He doesn't, specify anymore. He's quite... he's not too specific about it. That's what he said. For an example, though, 250 metric tons, that's 8 million ounces of gold, which equates to 80,000 COMEX contracts. So it's huge. And it's about $9 billion worth at present prices. So he's seeing, he says billions will be put into gold. And he thinks that it's going to make gold move even before September, where seasonally speaking gold does really well. He thinks it's gonna start before then. Could be any time now, and he says he's 100% sure that this is gonna happen. So we're gonna hold him to his word, and we're gonna follow. So, and the other point he makes is that the commercials, or the bullion banks, or they're also called swap dealers in the derivatives gold market, the paper market, the likes of Goldman Sachs, Barclays, JP Morgan, Citigroup, those kind of people. Apparently they've turned long gold. They were short when gold was around 1,300 in the beginning of June. But now they've gone long, and the people who are short is the hot money, the speculators or the hedge funds, and I guess the momentum players, especially looking at the break, the bottom of that double, the midpoint of that double top is around, the low is 1214, and we closed on Friday at 1213. So you could argue that technically, gold doesn't look very good, but there's a note saying that the commercials are, almost always right, in the precious metals market and other markets. So it's very interesting. What else does he say? Yeah, basically 250 tons. To give you an example, the UK has 300 tons of reserves, which isn't much compared to the US, which has 8,500 tons. But it's still a big amount, especially if it's going to be all physical and we want delivery. So he thinks that the paper market is going to break. I mean, we've been waiting for this for years. One thing I have to say about gold, I don't see it as a get-quick scheme. I see it as a protector of wealth, like silver as well. So I'm not too concerned, but I like following these things, and I think it's interesting, and some of you might want to speculate. And it's always interesting to know what gold and silver are doing in terms of the paper market. Anything could change, very quickly in this game. And the other thing I want to talk about is the seasonality. There's an article on Zero Hedge on July 6th, so about 2 days ago. It says the golden age has just begun. And it's authored by Dimitri Speck from acting-man.com. And he's done a chart here which averages, for the last 20 years, averages the performance of gold on a month-by-month basis. So I'll bring up the chart, which I took from that article. And as you can see, from January to February, seasonally speaking, in the last 20 years, gold does very well, on average up 4%. And then from just before the end of February till the beginning of July, apparently as of the 6th of July, gold doesn't perform well at all. And that's what we've had this year so far. And then you can see from the 6th of July to, I think, the end of the year, it does really well. And September is really the best month. July is not bad. So I want to bring up another chart, bar chart now about this. And as you can see here, it says gold in US dollars, percentage return between July 6th and February 24th, which is the best time, for gold, from July 6th to February 24th in every year since 1997. And if you note there's only about 5 years where, gold was down in that period. So 1997, 1998, 2000, 2014, and 16. So the biggest gain was in 2007. That was 43.56%. The largest loss occurred in 2014, and it was 9.1%. So this is quite interesting. It's not written in stone. It doesn't mean it's going to happen again this year. You can see it didn't happen last year, nor in 2014. But the odds are quite good. That's the thing about markets, the odds. You have to look at the odds and take a calculated risk. So that's gold, seasonality, Andrew Maguire, and pretty interesting comments he made about this blockchain, gold-backed and silver-backed currencies, and that some big players are going to need billions of dollars of physical gold to start these cryptocurrencies, blockchain-based gold-backed currencies. No idea who it is. He didn't really specify it. I think he's not... he might know what it is, but he's not supposed to come out with the information. So now I want to look at Bitcoin. So as I said, on June 22nd, I made a video about Bitcoin and some other cryptocurrencies. And I said that Bitcoin needed to consolidate a bit more because it had moved up too quickly. And I brought up this chart here. It's a weekly chart. And as you can see, the moving average there, I didn't draw this chart. It's from Bitcoin Wisdom, but you can see that we're very far away from the lower moving average there, the beige looking line. And I said we still need to consolidate. We need to get closer to that line. We've moved too far, too quickly away from that. And so I still think we're going to see more turbulence in Bitcoin, in the Bitcoin price and cryptocurrencies. That's not to say that I'm not positive longer term. I think they make sense, the cryptocurrencies. So I'm going to bring up a chart now, the daily chart of Bitcoin. And you can see here that the last time we had a big correction, back in the beginning of the year there, you can see the moving average, the blue moving average went below the beige moving average, and Bitcoin dropped back to around $900. And then started moving up again. And as you can see right now, that beige moving average looks like it's turning, and it's almost ready to go below the blue, which would be negative in the short term. We could even see Bitcoin move back. I don't know. It could go. It's difficult to say, but we could see quite a bit of downside here. But that would only help. In the longer term, Bitcoin, kind of stable, correct a little bit and take out all the froth out of the market, and then be ready for another move up. So I'm not concerned longer term, but in the next few months or so, we could see quite a bit of downside in Bitcoin. Or I could be wrong, we could go up, but looking at that weekly chart, it just looks like it needs to kind of consolidate a bit longer so that we can get more balance in the market. So yeah, that's what I want to talk about. If you enjoyed this video, give me a thumbs up, share it far and wide, subscribe to my YouTube channel if you haven't yet. You can also follow me on steemit.com. And yeah, if you'd like to donate to the channel, there's some links below in the description. I'll talk to you later. Bye.